Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1200. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Radio Plus app and Bloomberg.com. This is Bloomberg Surveillance.
And good morning, I'm Karen Moscow, along with Tom Keene and Michael McKee. The opening bell brought to you by SEI. Imagine when cognitive computing shapes the experience you create for your investors. See how SEI's global operating platform can be your catalyst for business intelligence at SEIC.com/imagine. And stocks opening lower. S&P 500 down 0.2% this morning, down 4 points to 2,100. Dow Jones Industrial Average down 0.3% or 58 points to 17,779. The Nasdaq down 0.3% or 14 points to 49.57. 10-year Treasury up 24/30 seconds. The yield 1.71%. Yield on the 2-year 0.77%. NYMEX crude oil down 0.3% or 14 cents to 49.03 a barrel. COMEX gold up 2.4%, up $28.80 to 1241.40 an ounce. The euro $1.1308. The yen 107.35. Tom and Mike.
Karen, thanks so much. Shout out to Chris Rupke, who has been an optimist and has a balanced view of the report. Michael McKee, Mr. Rupke quotes the economist DJ Trump, Mr. Trump out with a tweet. Terrible jobs report just reported only 38,000 jobs added. Bombshell.
You would expect a presidential candidate to comment on the report, and since
yes.
the Republicans are not the incumbent party, to have a negative view of things. My question for anybody is, what's your plan? And as we've heard from Bill Gross, fiscal policy would be useful at this point. Let's bring in somebody who's got a very big stake in the jobs report and what it means for the Federal Reserve, and that is the Chief Investment Officer of Pacific Investment Management Company, Scott Mather. Scott, you look at you look at the yield curve, and not 24 hours ago, you were pricing in a rate move from the Fed in June or July. Now you look at the 2-year, and you got maybe a September move. You start looking at the 3-year and above, and it's basically priced out to never. Is this an overreaction? Where do you think we should be at this point, and what do you think the Fed does do?
Yeah, good morning. It certainly looks like a bit of an overreaction. I mean, this is something we observe almost every month. There's sort of, an outsized focus on one number, which is the payroll number. And of course, we know it's volatile. In many ways, we should think about today as finally a return to a normal type of payroll number, where we expect to see a standard deviation on the order of 100,000 around the central trend rate. It's just been a long time since we've seen that sort of volatility, but that's historically what we should expect. So, the markets shouldn't get too concerned, I don't think, about this one number, because it's not, it's not corroborated with other employment numbers like the jobless claims, the weekly jobless claims number that we see, which is really the lowest rate in recorded history of jobless claims when you adjust for the population. And then, other numbers, other labor market numbers like we'll see on Monday with the quit rate, the JOLTS survey, the quit rate, which has been pretty high, indicating a pretty solid job market, and the number of unfilled jobs, both those are sort of back to boom time sorts of levels. So, I think that the market shouldn't be too focused on this, because other labor market indicators, and this is what the Fed will likely be looking at, other labor market indicators suggest that we're on trend with the same sort of pretty strong employment market that we've had.
Well, then what do you think Janet Yellen says on Monday?
Well, I think she'll probably bring some more focus and attention to those other indicators, look at all the progress that's been made, acknowledge that probably the underlying trend hasn't changed that much. The Fed's own forecast, though, as we move throughout this year, and their own expectation has been that the monthly number of new jobs we're creating will go down on average closer to 100,000 by the end of the year, because we're at full employment. That's natural. It should be happening. It means that you should expect to see more wage gains, less jobs being created as we get closer to full employment. So, we're not so far off the trajectory that they probably thought was appropriate to continue with normalizing rates. So I think they'll definitely want to keep the summer alive in terms of rate hike probabilities. As you mentioned, the market's probably priced out too much in terms of suggesting that the Fed can't move at all this year. I think it's probably their intention to continue to move, one or two times.
Well, then how important is Janet Yellen's speech, 12:30 p.m. Eastern Time on Monday?
Well, it'll be very important. I think, we get to hear from her again, and I think a reasonable expectation would be that given the number of FOMC speeches and officials that have commented in the past few weeks about their intentions to move a couple times this year, I think it'd be pretty unlikely if she deviates from that plan. But that's what we need to pay close attention to.
Where is the global system as we wander into a Friday and Saturday? As you heard on the PIMCO desk in Newport Beach, is there a stability within the system? I'm looking at the jobs report. Granted, it may be a one-off. I'm looking at German yields. I'm looking at yen, gold with a big spring back here up $29. But all in all, is there a stability to the financial system right now?
Well, we think there is. Certainly a stability within the financial system. We just came out with our new secular outlook here last week, and we sort of we titled it the global outlook stable but not secure. We think certainly we've got a lot of stability short term, but the longer term, the medium and longer term problems and sources of instability have not been addressed whatsoever. And so, we're subject to any sort of shock sort of throwing us off this path of near-term stability, and that's what we're more concerned about as the years go by.
If the Fed were raising rates, you would obviously be, trading differently. Can you still make money in bonds, given this report?
Well, it's going to be a lot harder in all financial assets, is what we would say. I mean, if this, as the bond market's sort of indicating now, if this is truly a shift down in the growth trajectory, then risk assets, equities, are priced incorrectly. If that's not the case, and we're on trend with 2% growth, which would be our base case expectation, then that means front-end treasuries in particular are not priced appropriately. So, both can't be right here. Either fixed income is wrong, or the equity market, we would say, is wrong. So, it is riskier for investors. There's no question about it. There's not many good places to hide. That's why we say the right thing to do is to probably look to de-risk. It means you don't take as much duration risk.
Come on. You sound like a portfolio manager at PIMCO. You looked at the risk. Scott, help me here. Are you selling bonds this morning because prices are high and yields are low?
Well, yes, we'll be fading a little bit of some of these moves. It's as I mentioned, we've had a more conservative posture. We've had less duration risk on the portfolios. We've had this view that the Fed is likely to move faster than markets expect, and I think we'll be sticking with that view.
Okay. Should we leave it there, Mike?
I think we leave it there, and we hope that Scott
very valuable
makes some money.
Scott Mather, he's de-risking with PIMCO this morning. We're going to deplane here at some point. Where do these words come? De-risk, deplane, de-surveillance. DE hyphen, DFed, D-Gold, D-Brexit. We got it, Michael Barr. Have you used the word de-Brexit yet? De-Bremain?
The Brexit,
deplane, de-risk. We're doing that.
Yeah.
That's our new shtick. Scott Mather, thank you, with PIMCO as well. Folks, we're going to do more here on Bloomberg Surveillance this morning. Of course, all of us off the jobs report. I want to emphasize that some of the things that plunged have actually found some stasis in the last 20 minutes. The 2-year finally has a bit of a little bit, the yield not plunging like it did before. That's a little confusing, but a little bit of calmness in the market right now. Yen, 107.10.
All right, let's check in with Michael Barr and get the latest world and national headlines. Michael.
Mike, Tom, thank you very much. U.S. Defense Secretary Ash Carter says the military will attempt to learn from the tragic loss of life in 2 incidences.
Our hearts and thoughts are with the families of those who lost.
5 soldiers were killed and 4 are missing after a troop carrier overturned yesterday in a rain-swollen creek at Fort Hood, Texas. 3 soldiers were rescued and will be released from a military hospital today. Also, a Blue Angels pilot was killed when his plane crashed near Nashville, Tennessee. Donald Trump is taking aim at the U.S. District Judge who is presiding over a class action lawsuit against the now-defunct Trump University. The presumptive Republican presidential nominee says Judge Gonzalo Curiel is unable to judge this case because, in part, of his parents being Mexican immigrants. Judge Curiel, who is American, was born in Indiana. German officials say they consider 499 Islamic extremists in the country to be a potential security threat. A spokesman for the Interior Ministry provided the figure today following this week's arrest of 3 Syrians suspected of planning an attack for the Islamic State group. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm Michael Barr. Mike, Tom.
Michael Barr, thank you so much. Negative 98 on the Dow. The VIX 14.21, only up 0.58 points. That's less than the move in bonds. The 10-year yield, 1.71%. Michael McKee and Tom Keene worldwide. This Jobs Day, Bloomberg Surveillance.
Bloomberg Surveillance is brought to you by your Mercedes-Benz Tri-State dealer. The star you've been wishing for is waiting at the Mercedes-Benz summer event. Head to your Mercedes-Benz Tri-State dealer for more details. Hurry before this star flies by.